Alright y'all, in this video I want to go over the Bybit exchange. This is going to be my version of the Bybit tutorial where we're going to go through everything you need to know from sign up, different types of orders, take profit, stop loss. We're going to be talking about leverage, margin, fees, pretty much everything you need to know to start trading, managing open trades, and having a smooth experience, because honestly if you're new to this it can be overwhelming if you're looking at all this stuff, and it's easy to lose money simply by pushing the wrong button. And we don't want that to happen. So let us get into it, guys. If you're totally new and you have never signed up with Bybit before, Bybit is currently offering some really cool stuff to new people. Right now they've got the deposit bonus bash going on, where you can basically get up to $1,000 bonus just for signing up and depositing Bitcoin. First of all, everybody who signs up and deposits any amount of Bitcoin, regardless of the amount of Bitcoin they deposit, will get a $10 coupon. And then down here, these are additional bonuses that can be claimed the more you deposit during the campaign period. So basically, you have the entire period that this campaign is going on to deposit Bitcoin into your account. If you deposit 2 Bitcoin into your account, you can get $1,000. Just a word of information: you can deposit the Bitcoin, claim the bonus, and then take the Bitcoin out if you want to, and then just use the bonus to trade and make profit. And honestly, if you have $300 of free money, you might be willing to take a little bit more risk with that and maybe do some high leverage trades and take a little gamble there, and you could actually make quite a bit of money just on these bonuses. So just throwing that out there. There's also a lot more bonuses and stuff like that Bybit has. If you sign up and go to their rewards hub, you can get a $50 bonus for depositing Bitcoin. You can get a $5 bonus for making a deposit in Bitcoin. For following Bybit on social media, you can get $5. They always have their flash deals in here, where if you trade for 7 days in a row, you can get $5. If you do have a total deposit of 20 of 1 Bitcoin, you can get $20. All these different types of things. Trading new pairs, you can get rewards. They also have the referral program, where if you get one of your friends to sign up, if you come to a referral program and you get one of your friends to sign up, you can get a $10 bonus, $10 of free money, plus you'll be entered into a contest to win $500, which is pretty cool. And not only that, guys, but we do have the Bybit Balance Booster, which is new, where basically now you are earning interest on your assets just by holding them on the Bybit exchange. So if you deposit some Bitcoin into your account, starting the next phase starts in 2 days, you'll actually be earning 4% interest on your Bitcoin, up to 10% interest on your Tether. And so there's a lot of incentive to sign up if you're new. And again, you can take advantage of these rewards. You don't have to be foolish about them. You can use them responsibly, and it's pretty cool to get free money. So all right, let's get into this, guys. If you're interested in this, click the link in the description of the video, and you can use my affiliate link and get all these rewards that I'm talking about here. So let's talk about signing up with Bybit. If you are going to sign up to Bybit, you are going to need a VPN, a virtual private network. It does not matter which one you use, but you will need one. I use VPN Plus. It's just like in the Mac Apple store, right? And basically, guys, right now if you're in the US or in the UK, you're going to need a VPN. Now, I used to say I was from the UK, and of course when I said I was from the UK, I used to talk like this because I didn't want them to hear my voice through the computer microphone and think, uh-oh, this guy's from the United States and he's trying to use Bybit with a VPN. So I would always talk like this. However, now that the United Kingdom has changed their laws about using the Bybit exchange, I have to use a different country. So now I use Germany. As a United States person, I do use Germany. Just saying. Okay, doesn't matter which one you use, but you need to make sure you have that on before you sign up with Bybit. Okay, so let's talk about depositing cryptocurrency into our account. When you sign up, you're going to sign up with your email. You're going to create your password the same way you would on Facebook. And then to deposit money into your account, you are going to go to your email address. And just so everyone knows, this is not my real Bybit account that I used to trade, okay? So don't try and hack my email or anything. But you are going to go to My Assets, and this is going to show you the assets that you have in your accounts. To get crypto in here, you're going to click Deposit, And then you are going to, let's say you want to deposit Bitcoin, you're just going to copy this address and then send Bitcoin to this address, and it'll be in your wallet within a few minutes, and now you can start trading. Okay, so let's talk about the different types of pairs that we can trade here. First, we have the inverse perpetual coin margined contracts. And basically, guys, what these are trading pairs where you are actually earning crypto as your profit. A lot of people ask, hey, Jason, I hear a lot that you trade 1x leverage. What's the difference between trading 1x leverage and just holding Bitcoin and then selling the profit? Well, here's the difference, guys. Here is the difference. If you are, let's say, you have one Bitcoin and that one Bitcoin is worth $1,000, okay, and it goes up 10%, okay, it goes up 10%, and now you have still just one Bitcoin. Your amount of Bitcoin has not gone up, and that one Bitcoin is worth $1,100. You could sell your profit of $100, but that means, right, that you would have, man, Bitcoin is pumping right now, y'all. Bitcoin is pumping above this resistance level right here again. Let's see how high it can go. Let's see how high it can go. Let's take a look at some of these lower time frames here. We've got some good money flow crossover there. Anyway, enough about the Bitcoin price. This is a tutorial, and I must remain professional. So let's say that you have, your one Bitcoin went up 10%, and now you have $100 profit. If you take out your $100 profit, now you only have 0.95 Bitcoin or something like that, right? You have less than one Bitcoin. But if you're trading inverse perpetual and you have one Bitcoin, and that one Bitcoin goes up 10%, now you have 1.1 Bitcoin, which means you can you can take your profit off the table, and you still have one Bitcoin. You can sell 0.1 Bitcoin, and you still will have your initial amount of Bitcoin, and you're making profit. So that it's allowing you to stack your crypto. It's pretty cool, guys. It is pretty cool. The other pairs that you can trade on here are let's take a look. Okay, I have to come back here to the USDT perpetual, and this is where you're basically earning Tether, okay? You're not earning crypto, you're earning Tether. So if you're trading the BTC USDT pair, you're going to get paid in Tether, where if you are trading 1x leverage and Bitcoin goes up 10%, then you are going to get back that amount of Tether, okay? So I hope that makes sense. All right, so there are different types of orders that we can trade with. I'm going to go ahead and go to BTC USDT perpetual. The first type of order is just a market order, and a market order means you are going to be buying Bitcoin at the current price that it is, the current mark price, and this will give you a 0.025% fee that you have to pay, okay? Because what's happening when you're using a market order is you're taking liquidity out of the market, because all the liquid assets that are on the exchange are being put into your order so that your order can get placed right away. So they're actually going to charge you a fee for that. However, there's also something called a limit order. A limit order adds liquidity to the market because basically you're putting your order into the order book, and your order will not get filled until it reaches that price. So basically I can put a limit order and say I want to buy certain dollar amount of Bitcoin. So let's say I want to buy $1,500 worth of Bitcoin at the price 56,033. I'm just going to do this here, and I'm going to click buy long. You're always going to want to push post only, because this will make sure that your order does not get executed as a market order, but as a limit order. Now, the cool thing about a limit order is, as maybe we will get to see here, if my order gets filled, see this? It actually put the order in the order book right here on this dotted green line, and it will not get filled unless the price comes down to touch that dotted green line, which it may or may not do during this video. But if it does come down and touch that green dotted line, I will actually get paid for doing my limit order. I will get paid for putting my limit order in, which is nice because, If you do the market order, you're going to start out your trade in the negative. But if you do the limit order, you're going to start out your trade in the positive. So I'll show you a market order. I'll do the same market order. I'm going to go ahead and buy long. And you can see that right away I got charged $2.48 for this market order. Okay, so that's the difference between a limit order and a market order. You should always try to do your order's limit, but sometimes you might need to do a market order. Otherwise, you're going to be chasing the price. If their Bitcoin is pumping and it's going up, uppity, up, and you're trying to get in that price action, you might find yourself putting a limit order and keep having to move it up, and by the time you finally get in, well, the move is over, and nobody wants to miss the move, so you might have to do market, you might have to do limit order. Okay, I want to talk about taking profit and stop losses. Okay, a lot of people see the way I trade, and they see that I set my trades like this, right? I say I'm going to go long when we come above the resistance. I'm going to set my take profit here. I'm going to put my stop loss down here below the exponential moving averages. But I say a lot, I'm going to take a little profit here. I'm going to take a little profit here, and then I'm going to take my final take profit up here at 57.4, right? So how do you do this in Bybit? How are you going to take partial profits without closing your whole position? What you're going to do is you are going to simply just do limit sell orders, okay? Limit sell orders. Let's say that you want to take some of your position out when Bitcoin gets to a certain price, but you want to let the rest ride. Well, what we're going to do is you're going to come here and you're going to say, okay, I want to take some profit at 56,329. So you're going to come back to the Bybit exchange here, and you're going to go to limit order, and you're going to put in the price 56,329, and then you're going to put in how many contracts you want to sell. Now, I opened a position with 1,500 contracts. That means I have $1,500 worth of Bitcoin in this trade right now, okay? So if I want to sell a third of that, that means I will sell 500 contracts at that price, and I'm just going to click sell short. And what this will do is this will post as you can see, a limit order at the price I want to take partial profit at. And when Bitcoin gets here, I'm going to sell $500 worth of Bitcoin at that higher price, and I will take out 1/3 of my profit. And I can keep doing this the whole way up. So let's see what other take profit levels I had here. I had one at 56,843. So I'm going to go here and type in 56,843, and I'm going to sell another 500, let's say. And you can also set a market take profit order simply by coming here where it says TP/SL, and you can set take profit at whatever price you want, and this will close your entire position, okay? So if you want to close your entire position at 58K, right, 58,000, you just type in 58,000 and click confirm. And what this will do up here, guys, is, hang on, let me make this bigger so that we can see it. What this will do is this will close out your entire order. So as your limit orders get filled, like you sell 500 contracts here, you sell 500 contracts here, that will change this order to close your entire order so that you're only selling the remaining 500 contracts, and you're not going to enter into a short position. Because here's the thing, if you keep setting limit orders, eventually those limit orders will get filled and they will put you into a short position unless you click reduce only. Okay, reduce only will only reduce your position size. Okay, so if you click reduce only and do a limit order, that will prevent you from entering into a short, because it is very possible that you could sell, 600 contracts at 58K. Go ahead and click sell. And what will happen is, because you've already sold your 1,500 contracts, you are going to enter into a short position for 100 contracts when you get to this level. So to avoid that, you would make sure that you are clicking reduce only. Reduce only. Okay, we don't want to end up in any shorts unless you want to get into a short, in which case, do whatever you want, all right? So let's talk about stop losses. Stop losses are best to do market orders, because if you're doing limit orders, there's a chance that they won't get filled and you won't be able to get out of your trade in time. The easiest way to do a stop loss is coming down here to TPSL and clicking add, okay? And then the stop loss is right here. What percent stop loss do you want? Do you want a 5% stop loss? Go ahead and click confirm. This will give you a stop loss, okay? And then if the price comes down to this level, it will close you out of your trade, okay? There is a way to do multiple stop losses, and the way you do that also is you do a conditional market order, and click close on trigger. Okay, it's very important. And then what I can do is I can sell 500 contracts. I can sell 500. I can sell 1/3 of my position. Let's say if price comes down to I don't know, 800. I want to sell 1/3 of my position there, where I still want to stay in my trade, but I don't want to stay in with 1,500 contracts. I want to only stay in with 1,000 contracts. And then if we come down even more to 55.5, I can sell another 500 contracts. Now, again, guys, this is different than a regular limit order. We are going to be doing a conditional market order that says close on trigger. This is how we're going to set up multiple stop losses. Okay, I'm going to go ahead and close out all these orders now. I want to talk about leverage, and I want to talk about margin. I want to talk about leverage, and I want to talk about margin. But before I do that, I want to talk about fees. I already mentioned the fact that if you are doing a market order, you are going to get charged 0.025%. And if you do a limit order, you are actually going to get paid. I think it's lower than 0.025, but it's still something. You're still getting paid to place your limit order. There's something else called the funding rate. The funding rate basically is charged to people multiple times per day, and you can see what it is right here. So right now it's 0.0156%, and it changes often. The predicted rate is predicted to go down by 0.005% in the next 5 hours. And sometimes you will have to get charged this fee, and sometimes other people will be paying you this fee. You can kind of think of this as interest for borrowing money from the exchange, except instead of paying the exchange, you're actually paying the other traders that are trading on Bybit. And just be aware of this, because sometimes these fees can be quite high. They can be quite high, and you can end up really, if you're not paying attention, you could enter into a position, and if you're looking to just do a scalp trade, you could get charged quite a hefty fee, and it won't be worth it for you to enter into that trade. Okay, so let's talk about margin, and let's talk about leverage. Bybit is a margin platform, meaning everything you're doing on Bybit is, you're not actually trading your actual Bitcoin on for spot trading. What you're doing is you're putting your Bitcoin up for collateral, and then you're trading everything on margin. You're essentially always borrowing money from the exchange no matter what. So right now I'm putting my Bitcoin up as collateral, and Bybit is taking the difference and paying me out my profit. Bybit is paying me out my profit. So right now, this $4.76 that I'm earning, this is profit I'm going to get back when I close the trade in Bitcoin. So your margin right here is how much of your own account you actually have on this trade right now. Right now, I only have $500 of my total trading account on this trade. This is where leverage comes in. Leverage will allow you to use less margin to get a greater number of contracts in. Another way to look at leverage is, if I have, which I do in my account, I have 0.01 Bitcoin. If I am using leverage, that means I can trade with up to 100 times more than the actual Bitcoin that I have. So if I do, 10x or 25x or 50x or 100x leverage, that means Bybit will actually loan me up to 100 times more money than I actually have in my account, and I can put my 0.1 Bitcoin up as my position margin, but my quantity of contracts can be up to 100 times that. Now, this comes with a lot of reward, because if I have 0.1 Bitcoin and they're giving me 10x leverage, that means I have a whole Bitcoin to trade with. If the price goes up 1%, that means I'm actually earning 10% on my investment. However, this comes with a lot of risk, because if the price goes down 1%, then I will lose 10% of my whole trading account. Okay, now there's different kinds of margin. We have isolated and cross. Okay, the difference is isolated will allow you to only risk the amount of margin that you're putting on the trade. So because I have isolated margin on right now, I'm only risking $500. I'm only risking my $500. But if I had cross margin on, if price comes down low enough, it will go past just the initial position margin and it will come into my assets and it will take from the entire 0.01 Bitcoin that I have in my account, which is much more than $500. I think it's about $1,000, give or take. So that's important to keep note of. There are pros and cons of using cross versus isolated margin. People might want to use cross margin to give them more playing room in case they're in a very volatile swing trade and they want to account for price, having these dips and stuff like that. The cross margin will give them more playing room because they have more assets available to put up as collateral so that they don't get liquidated. And that brings me to another point, which is liquidation. If you are trading with leverage, you will have a liquidation price. So let's say you are using 10x leverage. Okay, you're using 10x leverage. And notice that now that I changed my leverage, my position, my margin, the amount of money that I'm actually risking from my account has gone down because I'm borrowing more from the exchange than I originally was. But now I have a lot more money to put on the trade. Okay, I only have $1,000 in my account, but I could put $10,000 into my account. So I'm going to go ahead and just do that. Now, we can see here that when we click the buy long button here, it is telling us that the estimated liquidation price is 51,347. That means if the price goes down to 51,347, I will lose everything in my entire account. Okay, the price only has to go down 10% for me to lose everything in my entire account. So if I go ahead and I place this trade, you can see that now, even though I only have $1,000 in my Bybit trading account, I have now $10,000 on the trade. And so everything is 10x right now. And of course, you could even do 100x. Never do this. But let's just see what happens. I do 100x. Go ahead and confirm. Let's do a market buy long just to see what happens. Let's see. I'm going to put $77,000 on the trade. So now you can see I have 87,436 contracts on this trade. 100x leverage. Very, very dangerous. But my liquidation price is only $300 away from here. That means if Bitcoin goes down $300, I'm going to lose my entire account. And you can see I'm losing money rapidly. Rapidly am I losing money. You can also see that I have a very high fee for doing a market order with this many contracts. This is why you always want to try and do those limit orders. Right now, I'm losing $178, and I already lost $66 just from doing a market order. So if I don't do something quick, I am going to be liquidated, and nobody wants to be liquidated, so you got to watch out here. This is a very risky and foolish trade. Very risky, foolish trade of me. Okay, so that about covers everything for basically getting started on the Bybit exchange. Be careful, guys, using the leverage. You want to make sure it fits in your risk management strategy. This is something that everybody should have. If you're trading, you want to make sure that you have a way to manage your losses, because losses will come. Now, look at this, guys. Just think about this for a second. If the price goes down just another $100, give or take, right? Just another $100, give or take, I'm going to lose my entire account. My entire account will get liquidated. Even though I'm only down $300, my entire $1,000 account will get liquidated if the Bitcoin price drops another $100. This is why it's so risky to trade with the high leverage. And this is 100x. Don't ever use 100x, guys. This is crazy. This is nuts. Okay. So I think that pretty much covers it, guys. As far as this is pretty much what you will need to know in order to trade on Bybit and do well. Of course, I'm going to close out this order. And I recommend I like to trade with lower leverage. I like to trade with lower leverage. If I'm scalping, I will use maybe 2 or 3x, 5x at the most, and I'll use a very high amount of contracts. But if you're new to this, you're probably going to want to start, and I mean this, right? If you're new, you are going to want to start trading with 1x and just get the hang of trading. Get the hang of doing your technical analysis. Okay, just get the hang of it. Get the hang of it before you actually start trading. All right, guys, if you have any questions, feel free to hit me up in Discord. And I just wanted to make this quick video because a lot of people have questions about trading on Bybit, and instead of answering all the questions, I figured I would just make my own video. And of course, there's a lot of more things to talk about in Bybit. I'll probably be doing this in a series of videos. But all right, guys, God bless, and I'll see you in the next video.